Hey, welcome back to the Frank Roche Show. It's the end of the week. Let's check in some economic data released for the week, see how the U.S. economy is performing. Remember, we're always looking backwards when we do economic data. We have very few real-time economic indicators, which is okay. So looking at data from August, primarily a couple data points from September. Checking on markets. There was no data on Monday, the 23rd. On Tuesday, we had the Conference Board Consumer Confidence Index for September. Came out 98.7 versus an expectations of 103.9. And we have an index of 105.6 in September. So you can see it's moving lower as Americans are more concerned about the outlook in the next 6 months. This is kind of a how's your economic world type survey. So moving in the wrong direction for us. We want the economy to expand. Wednesday, as always, 7 a.m. MBA mortgage applications for the week ending the 21st, up 11% versus up 14.2% in the prior week. These are refinancings. 30-year mortgage rate down near 6% now for many people. If you got a mortgage in the past couple of years, you were paying 7% or higher. Mortgages fall, you take an opportunity to refinance your mortgage, pay some additional closing costs, drop your monthly payment, and significantly reduce your lifetime interest payments on the mortgage. Also on Wednesday, we had new home sales for the month of August, 716,000 units on an annualized basis. Better than expected, but lower than the month of July. New home sales were down 4.7% month over month. Housing prices remain at record highs. Mortgage rates are falling, but still prices are a bit prohibitive for many. New home sales, of course, homes that have never been lived in. On Thursday, as always, at 8:30 a.m., initial unemployment claims. How many of our fellow Americans lost their job last week and had to file for initial unemployment insurance? 218,000. Happy days. God bless America. Let's break out in song. Expectations 224. The prior week, 222. I've been saying this for a long time. Something's wrong with this data. So the Fed dropped the federal funds rate 50 basis points last week over concerns about recessionary pressures and a weakening labor market. Well, this indicator suggests there's no weakening labor market. Either the Fed knows what I know, that this number is fugazi and being manipulated by states, or the Fed's just wrong. Also on Thursday, remarkably, again in the face of a 50 basis point rate cut, Q2 revision, GDP growth, the final number for the second quarter, up 3%, as expected, and higher than the first quarter of 1.6%. GDP price index, 2.5%. So indicating moderate economic growth and not suggestive of a 50 basis point rate cut by the Fed. If this number is real, we've seen tremendous revisions on GDP data. So we have a Fed that's dropping interest rates before an election. We have potentially boosted GDP numbers before the election. Initial jobless claims low. Let's do two things. Let's reduce borrowing costs for consumers and still show that the economy is growing to help the Democrats win election. Also on Thursday, pending home sales for the month of August. Homes in contract waiting to go to closing, up 0.6%. A little lower than expected, but much higher than the prior month of September. Again, a decent data point. Housing remains strong. Prices are all-time highs, and the Fed still cut rates. Friday, today, the 27th, the goods trade balance for the month of August, our net exports and goods only, minus $94.26 billion for 1 month. Holy cow. Better, so less negative than July, which was 102.8. But we're still on pace in 2024 for over $1 trillion goods trade balance deficit. My God, $35 trillion in debt on the fiscal side. The Federal Reserve with a $7.5 trillion balance sheet. Household debt, $13 trillion. Goods trade balance deficit for the year, $1 trillion. Just leakages all over the place for the U.S. economy. What a mess. And that's all the important market moving data that we had for the week. There's lots of other data, of course. Let's take a quick look, a snapshot on markets here as we close the week. The Fed did its job, didn't it? Remember, I told you the Fed really is primarily concerned with a wealth effect. That's why the Fed keeps juicing the stock market. After the Fed's rate cut last week, stocks rallied to all-time highs across the board. Reached a high, let's see, of this week of 5,759, closing the week here at 5,738. I hate to do this again. I've been selling rallies since 5,000, so I'm out of the money. But boy, oh boy, Talk about bubblicious. Year to date, we're up 20%. 1 year change up 34% on a weakened economy. Messes everywhere in the world. Checking in on fixed income. We'll check our benchmark 10-year US Treasury. We see the 10-year at 3.75%, down 3 basis points from yesterday. The yield has rallied a little bit here. So remember, inverse relationship between the interest rate and the price of a bond. And prices have fallen off a little bit here. There's still concerns in the commodities market about inflation. No indication here in the fixed income market. We look at the 2-year 3.56%. So we still now have a positive sloping yield curve from 2s to 10s, which is good news. But we're still inverted from the federal funds rate to the 2-year, which is not good. Check on oil, West Texas Intermediate below 70 at $68.56 on economic slowdown and increased supply. Up 89 cents on the day. Nat gas, $2.91, up 16 cents for the week. And gold still near all-time highs, 2,675. And silver, the same thing. Silver's not quite back near its all-time highs, but approaching that level. But still, they're both speculative investments used to hedge against inflation. As I said, silver trading 31.94 today to close the week. The all-time high in silver, 38.62, so we're not far off. And then we'll check in on the currency markets quickly. The US dollar index trading 143, down small on the day, down small on the week. US dollar index, remember, it's a weighted basket of currencies. And we're at the lows of the past year for sure. And all-time lows in the US dollar index, we have 71.80, so moving in that direction. Let's check against some major other currencies. We'll check dollar yen, euro against the dollar. Dollar yen trading 142.21. That was at 157 not too long ago. Sterling trading 133.70. Euro against the dollar trading 111.60. Dollar Canada 135.20. So still within a strong dollar range, no question. But the dollar has weakened quite a bit since last week when the Fed cut interest rates. Remember, interest rates are a driving force for exchange rates when we exchange one currency for another. So a little snapshot on markets there for you. And of course, we always want to keep an eye on the price of money, the interest rate, which is controlled by the Federal Reserve. There's some speculation the Fed might drop another 50 basis points in November. The Fed is messing up here. The Fed is screwing around. This happened in the 1970s when they cut interest rates too early. And of course, inflation came right back. Inflation battle is not over. While inflation rates are lower today than they were in 2022, 9% in 2022, 2.5% today, still above the Fed's target of 2%, that still means prices are rising. All right, little check on data and the economy. All right, that's all I have for you right now. Always try to buy American.